You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again to put on our option block pants. This is indeed your favorite, I hope it's your favorite, bi-weekly source for all things options related, a little bit of options wit, some wisdom, some analysis, some education, a little dash, a sprinkle of some fun, and mix in your questions, and you got the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating Options Insider Radio Network. You're saying to yourself, hey, what is that? Well, that is, of course, our decade-old now, crazy to think, decade-old network where we got 15 programs for you guys to choose from. Easiest place to see all that goodness, theoptionsinsider.com, or just subscribe to our full network via iTunes or TuneIn and Stitch. You guys like to pick up your individual shows too, that's fine. You can subscribe to whatever show you like. But if you want the full kit and caboodle, the network is the place to go. It's available pretty much on every platform you can possibly think of, including via the app stores, iOS, Android, and the beloved Fire OS. And of course, however you listen, including those of you who can join us every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. We love you guys out there as well. And however you listen to us, live, after the fact, podcast, iTunes, whatever, hit us up with your questions, your comments. We love to hear from you guys. And joining me on the program today, a truncated all-star panel, all-stars of two. And joining me way off in the deep, deep snow-covered mountains and ranges of Maine, we are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome back to the Option Block program, sir. And how are things in the Duchy of Maine? And what's the lobster scene like over there in the snow-drenched hills of Maine? Not too booming, I'm guessing, in the wintertime with all the snow everywhere.
You know what's amazing is those guys still go out. So there, I was at the Lobster Pound yesterday, just down the street, and there was lobsters, all the tasty lobsters you could want. Just reach your hand in and grab one. So they're still pulling them out. Oysters too. It's crazy.
So you have an actual lobster pound, not a dog pound at your house, but a lobster pound. Goes to show you
exactly.
What part of the world you live in.
They keep the stray lobsters there. I don't know why they call them. I think that's a Cape Cod term, lobster pound. But anyway, there are several venues to get live, lobster off the boat around here. When you drive down your street, block, whatever, and you see there's 3 lobstermen that live on the same block, that there are lobsters to be had.
You're in lobster mecca. So maybe we'll talk about some lobster futures someday. I'm sure there's a deep and liquid market for such a thing. But now we got to keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block. This is indeed the portion of the program where we break down what was going on, what was cooking out there in the old markets, what was catching our eye in the broad market activity. Another day of green On the old screen, most of the major markets closing up over 0.5% today. S&P closing up about 0.6%. The Nasdaq in a similar range. The Dow a little bit stronger, about almost 0.75% to the north. And surprise, surprise, VIX cash also on the green on the screen, getting some of that weekend back and then some, up about a little more than 1/4 of a handle, back over the 11 handle. We'll see if it flirts with my level yet again this week at the start of volatility views before so evilly crushing my dreams at the end of the show. I was that close. I was touching it almost, Mr. Rock Lobster, to start vol views this week, and then it as the show progressed, it flirted ever higher, and it ended up going into the Greasy Meatballs camp. He needed a win. He hasn't won in a while, so I don't feel bad. But still, those are the ones that hurt the most. But that said, Mr. Rock Lobster, interesting day. We had a decent range in the S&P. I said it closed up a decent. It had about a 10 handle range or so out there, from about 23.21 up to about 23.31 out there. So a little bit of movement, not entirely quiet on the Western front. But that said, Mr. Rock Lobster, what caught your eye in today's activity, sir?
It seems, I don't know if I'm right, but it's hard to really tell what's happening in Washington. I don't get it. So
is this now, or is this like a general commentary for all time? Because you can apply that statement pretty much at any given day of any week of any month, I think.
It seems like there's always like something or somebody's I'll put it this way, that the umbrage we have on this show is nothing compared to the umbrage going on in politics right now. I thought we were the kings of umbrage, but this is not even. It's not even close, Mark. It's not even close. So anyway, but you would think this umbrage would translate to volatility in the equity market, and it doesn't. It's almost like the opposite happens. It's almost the more madness that happens, the more we just keep going up. Like, nobody's even saying all-time highs anymore because they're just tired of saying it. It's good. I was just complaining in our chat room. I'm writing some calls in Apple. I'm like, oh, it's 2% away in a week. No way. And they're already in the money. It's so aggravating. I got to roll them again. So
wait. You're right. You're writing Apple Vol right now. I do believe. I think it was on this show last week that your cohort there, your partner in crime, said something in his typical colorful fashion along the lines of, "If you are selling Apple Premium at these levels, you are a jerk."
You are a jerk.
So technically, you are a jerk by his analysis.
Now, I think if you sold longer dated Apple Vol, you were a jerk. I just keep trying to write some calls against calls that I'm long that are in the money, and it just keeps going. That's why he's right, because you know what? It's totally useless. So I started reducing the ratio because I'm just stupid. This thing can't keep going up, but up another whatever. So my solution to that was just, okay, I'll stay long some calls, but I'll reduce the ratio that I sell and whatever. And that's what it is. So, but that's, I think, we just keep going up. And is it a tax deal that's coming? Is it what is the thing that's going to move the needle as far as, why we keep rallying? But I guess, there just hasn't been a reason for a pullback. So, I mean, you figure there would be one down day, but there just hasn't been. So I'm confounded. I have not faded it, so it doesn't really bother me. It's been a little annoying with rolling all the calls up and stuff, but it's still working. It's just it's not very exciting. Let's just put it that way. It's just there isn't a lot of there's not a lot of fun movement. It's sort of just it's kind of like Lurch in the Addams Family or whatever, just lurching up. Another 0.5%. Oh, another 0.75%. Oh, another 0.4%. So that I think actually the only thing that was really moving was Nvidia. After what was that? It was a $25 stock a year ago. Now it's $109. So I think the short guys at Citron. sharpened their nasty pencils and started poking in NVIDIA in the eyeballs. So that stock is down $5, which has been a while since that's happened. But other than that, there was nothing really, just looking at the usual suspects. Gold pulled back a little bit, but nothing big. Treasuries have pulled back. So almost like for a while, those risk assets got bid last week and now gone. That bid has just disappeared. So, what are you going to do? That's what it is. And for whatever reason, the more the maelstrom continues in Washington, the higher stocks climb. So I don't normally try to explain it. I just, you just try to follow along with what's going on. And that's what we got.
Yeah, it's a crazy one. You're right. Apple continues to flirt with ridiculous levels. All the first world problems of having to roll calls on an endless basis. People don't really know the true pain we feel until you have to roll calls. Forget about the myriad problems that plagued us over time. Rolling calls, clearly number one from a mankind societal standpoint. I'm looking here, though, Apple flirting with some pretty impressive levels, closing today about 133.25, so up about almost 1% again today, a little over $1 and change again today. Hit a high of 133.82. That's close to, but it's not the all-time high. The all-time high was actually 134 and about a half, 134.54, which came at about end of April last year, or actually 2 years ago, 2015, April 28th. Of 2015. It's hard to believe it's been a couple of years since Apple hit that all-time high. Looking like Uncle Mike, if you were here, by the way, on assignment, Uncle Mike, down in Mexico, a nice, fun assignment for him this week. But if he were here, I'm sure he'd be saying that maybe his innovation index buy-in level, selling all those 75 puts, ain't going to happen anytime soon. Yeah, nice. How far out you have to go to get a bid? Let's just see on Uncle Mike's juicy 75 puts. You got to go probably, I'm going to guess off the top of my head, somewhere in the May-June time frame. And what do we got here? Oh, no bid in May, so you got to go out to June. Yes, I was correct. A penny bid in June. So Uncle Mike not getting all the love for those 75s that he once was. Perhaps that will change his mind. We shall see. Speaking of changing, people who aren't changing their minds, Mr. Rock Lobster. It's all these freaking options exchanges. They refuse to go gently into that good night. No, sir. They will fight back, and they will fight back with a vengeance. If you're saying to yourself, 14, that's not doing it for me right now. I need more options, pun intended, in my options trading. Well, don't worry. They got you covered. We were so busy last week with earnings, didn't get a chance to talk about it. But yes, Mr. Rock Lobster, your prayers have been answered. The 15th options exchange launched last week, and it is the MIAX Pearl options. If you're saying to me, what the heck are you talking about? What are those letters? MIAX stands for the Miami Options Exchange, which you think is run out of Miami, but no. Princeton, New Jersey, listeners. So just like the Boston Options Exchange run out of Chicago. Go figure, that's how these things work. So yes, Mr. Rock Lobster, I know you were saying to yourself, MIAX only has a small market share already, but they're not giving me all the choices I need. They should really add a second one. You've been saying that to me. I've lost track of how many times you've said that to me. Well, there you go, sir. Now your prayers are answered, that of you and all your folks in your chat room with number 15, MIAX Pearl. What say you, sir? How do you greet this latest entrant into our already exploding, far too big options exchange landscape, sir?
What a waste of time and money. Sorry. Hopefully they're not going to be maybe if they're a sponsor for the show, I'm going to like them. How about that? Will that help? So I'll like them.
There you go. Good to know you're for sale at a reasonable price. I like that, sir.
At a reasonable price. If they sponsor the show. You know what? This is just, it's madness. You know what's weird? Is somehow they make a business case for this. This is on the heels of they're saying the volume's declining or something, right? So I was just reading that thing, Sprecher was talking about that. So I don't get it. Yeah, I don't get why you do that.
It is a bit of confounding, especially an exchange like MIAX. I can pull it up here. Give me a couple seconds while we're chatting here, but I can pull up the most recent market share numbers here for last month. And while I'm doing that, listeners, yeah, of course, it is interesting because you have these exchanges that are, I think their value, they're not their value, but their market share. It's shall we say is nominal, not huge. They're not talking 2/3 or half of the industry like some of the old players used to do. But you're talking sub single digits. Low single digits, I should say. I don't have the numbers here. I'm trying to find it, but yeah, they're in that level. So you might say to yourself, well, why? Why would an exchange do such a thing, such madness? Well, first off, these things are called exchanges, but they're kind of exchanges in name only. They're kind of really a new platform and a new fee schedule. Or not even a new platform, a new kind of UI, a new entrance point to the same platform and a new fee schedule. So they don't have to spin up new technology. They don't have to do a lot more to it. And now instead, you come in through one portal and you have price, time, priority, and have this kind of stuff. Over here, you're going make or take, or you're getting rebates. And it's just a different fee structure, quite frankly. Same tech, different fee structure. So it doesn't really cost a lot. It's kind of de minimis. And so the notion that these are multiple exchanges, we see this a lot of exchange groups now. It's kind of silly. But that said, if you were worried about fragmentation, well, your worries are not going to go away anytime soon, even though the industry continues to contract from a volume perspective. As we all know, last year, not exactly the best year for overall options volume. Yet that has not dissuaded anyone from diving headlong and heedlessly into the options fray. Someone who may be regretting that choice, Mr. Rock Lobster, is someone you just referred to, as our friend over there, Jeff Sprecher, the CEO of ICE, and now, of course, ICE NYSE. And, when they acquired NYSE, ICE previously to that never really had a robust options market. ICE, of course, I'm talking ICE listeners, mostly OTC, a lot of the OTC energy space, and they have their own variant of WTI and a bunch of other things. They did options, but it was never a huge push for them. I remember they did a bit of an options push a few years back around, I think, some coffee and cocoa and some other options they had, but they never really took off. And then, of course, they acquired NYSE, which, of course, had a thriving options business. And apparently it's not at least going that well, at least according to the CEO, Sprecher. He said, that is one of the most confounding businesses that we have, when he was talking to Markets Media last week. The use of options as a tool for risk management is increasing, yet the options volume on listed exchanges is decreasing. He goes on to say pretty much that he does not plan to jump on the acquisition bandwagon. He's not going to fight to increase NYSE's options market share. He says increasing overall market share in a decreasing market is not a viable strategy. Maybe tell it to the folks at MIAX over there. They may be interested to learn that. But still, it's very interesting. And this kind of feeds back what I've heard and just thought myself from my many interactions with them over the years, is that options is not a core business for them, not a core driver of business anyway. Whenever they made these deals, they acquired NYSE and others. They made a lot of talk about the European futures business they were acquiring and things like that. Options was always somewhere way down on the totem pole for that. And clearly, from hearing this, he's not enticed by the typical way to get business in the option space, which is, of course, just cut your fees or pay everybody. Even worse, pay people to trade on your exchange, give them aggressive rebates. He says, as a manager, I have two choices. I could cut prices and talk about our improving market share, or I could maximize the footprint that we have. I'm choosing the latter. I can't really disagree with him on that, even though it is kind of funny. This article may be putting into words what I think a lot of people have suspected for a long time. ICE, yeah, as the title says, ICE, cool on options. So what do you think, Mr. Rock? Do you agree that this is indeed one of the most confounding businesses out there, the listed options business?
The problem is let's see, when did I started in this business? I had 1989 as a quote operator. And the only thing I could say really is it just continues, it always evolves and changes. Even the way making money trading options, although a lot of the fundamentals, it's just that things continue to change, and it hasn't ended. I think that guy's probably one of the smarter guys in the whole business. Let's just call it the derivatives business. He hasn't done too bad. So I think anybody will figure it out, but I think the biggest problem with the business is just it keeps inventing ways to cannibalize itself, through fees and maker taker, and the whole downflow of payment for order flow, which I think that was kind of the death knell of the business being fun, because then it brought in other models like the other ISE, the ISE at the time, the electronic exchange, because all of a sudden now, they could compete on a different way, and so will that guy figure out a way to make money? Probably. Is there a way to make money here? Yes. Are all the fees somehow going to zero? I guess so. I don't know how the exchanges, they like, I guess the SIBO, besides launching, a product that fires up the imagination and then hopefully it doesn't get, multiply listed. I don't, it's a tough racket to break into. Let's put it that way. So, that's again, but there's so many, there's so many things that confound you. Like, why would they start even another exchange? Why would they even spend the money for the IT for another exchange? So the whole thing is a bit confusing. I thought for a while when we were 4 exchanges, we were going to be down to 3, which looked close for a while. And then all of that went away very, very quickly. So I think he'll figure it out. For the most part, I think the retail, for as far as retail trading goes, I think the markets have, at least on the more liquid issues, are pretty good. I'm surprised. I'm putting orders in. Our guys in our chat room put orders in, kind of in a midpoint almost, and some of the more liquid names, they get filled. And if you're a little careful or patient, you get much better fills than you used to, because of the zillions of electronic eyes that are trying to do all kinds of stuff. So, the retail person probably gets a slightly better fill, and somebody somehow arbs, a fraction of a penny somewhere. I don't know, without going into the details on that, but I think the level of quality, the quality of a retail fill is not too bad. Just by observation, I don't know what the stats are, but it seems like, there's always kind of a price improvement on the listed markets. So I think that's good. The more illiquid stuff is tougher, but then again, illiquid options have always been tough to trade. The state of the business, what's funny is if we have a market this year where the market's up another 10% or whatever, if that comes to pass, it's certainly trying to do it, in the first month. Public will be back in 2018, just buying calls again. And, that usually is the end of the market cycle. But right now, I think for whatever reason, there has been some benefit to the retail customer just because of, I think the fill quality is not too bad. And, being a retail guy now myself, I mean, that's what we got to do. Even for the fun, we get great fills actually, when we want to get something done. So how the exchanges are making money on it, I have no idea. That is a topic for, sharper minds than my own right now.
Clearly, the exchange space also divided on it themselves, saying to themselves. One guy saying, yeah, this business is crazy, it's confounding. The other guy's like, yeah, we're launching more. So a little bit of different MOs there. But our MO is to keep on rolling with the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time for the Odd Block, the portion of the show where we break down weird, wild, wonderful, whimsical, and just sometimes just outrageous paper that is lighting up the old options market today. Going to kick things off. I think this is a newcomer for us here. This is TrueCar Inc., ticker symbol TRUE. TRUE, closing today about $13 and change, off about 1% on the day, but not a huge down day for TrueCar. Still bucking the trend of most of the major rest of them indices and market up. So TrueCar taking a little bit on the chin today. If you're not familiar with these guys, they are a diverse software ecosystem for buying cars. So there you go, maybe kind of like a cars.com or a few other similar things along those lines. It's a name that does about 2,200 contracts a day, doing a little more than 10,000 today, so a little more than 10x their ADV, 117.7 to 1 calls over put. So that 10,444 10,356 was calls. Only 88 was in the puts. And yes, we're talking puts. No, I'm just kidding, of course. We are talking the calls. And this activity coming out to April. And this one a little more interesting. Mr. Rock Lobster, we talked on a show last week about, these are obviously challenging times for yield hunters. People are going hither and yon, diving into new products. Talked on our TWIFO show last week. People going into commodity options, trying to get some vol, trying to get some yield. We talked about someone rolling all the way out to April last week for not even like 12 cents, something along those lines. So we're in those markets now where any cents you can get, people are going to grab it. One of the other strategies you can do, of course, is migrate perhaps a wee bit in the money. And that is perhaps what we have going on today. Either that or he could be closing. We'll get to that in a minute. This is the April 12 halves. Like I said, they closed $13 and change, so these are about 60-odd cents in the money. Going up in one block to start the day on the Philly, 8,812 to be precise. Going up, paper selling for $1.25. As the day went on, about another 1,200 or so piling into the tune of a little over 10,000 total on the day. Again, all that going up, at least the early kind going up on the Philly. There's some size open interest here, though, about 98,000, so nearly 100,000 contracts open on this strike. If this is the case, and this is our friend perhaps closing out, which it could very well be as well, then this guy is not done, not by a long shot. Let's see really quickly if we can pull up here where some of this OI popped up. Well, we saw decent increases back at the end of January. Looks like, there were 65,000 open even then, so on this strike. So this strike has been the hot strike for some time, going all the way back to the beginning of January. There was a size open interest on this strike. It has since grown from about 45,000 to about double that, a little more right now here at the end or middle of February here. So interesting love here for this strike. Looking back at the year that was here in good old true, this thing has kind of followed the market along quite a bit, kind of vacillating, hitting its nadir back in February of last year, and this year now, like I said, charging north of the 13 handle. Been a lot of vacillations along the way, so an interesting ride if you have been riding true all along last year. Mr. Rock Lobster, what's your feel? I mean, the OI speaks to probably closing, maybe taking some of your money and running. This thing has been kind of bouncing around a little bit lately, our friend here, taking some of those calls off the table. Or do you think this is kind of what we were alluding to last week, and the hunt for yield has gotten more aggressive and more outrageous just in the last few days?
Well, I think these odd blocks today are definitely there's some interesting. They are bull market trades, I'd say. We've been following this customer in our chat room, not following, trying to mimic what he's doing, but trying to take advantage of how this guy has single-handedly annihilated the volatility in this particular name. I'm pretty sure, not 100% positive, but I'll say 95%. I think it's just a large holder of stock, and they're just writing these calls. I think True's had kind of a little bit of a run. And, you probably, saw this back in the day when you were a young kid without a mustache and a beard. And you would look at, you have these customers that just write, they're sitting on big gains and they just write a call into the ground. And, that's what it looks like. Yeah, not very long ago, the thing was $6.50. In November, I mean, it hasn't moved from the 12.5, right around the 12.5 handle in months. So I think somebody is just taking money here. And I've been trying to figure out a way to buy these calls and write some 10s against it on ratio because they're just so cheap. But I have not been able to get a real counter side, so there was no trade for me. So I keep watching them. It's hard for me just to leg something like this. I could sell stock. I'm not sure about the stock issue with this. Anyway, so there's too many questions for me to do anything, although I find it interesting. But I think this is just, like you said, I think somebody's just selling calls against an existing equity position. Could be could be a fund, whoever took these guys public, whatever, big holder. But I mean, you look at it, 100,000 contracts, and it's all one strike. I think all the open interest in this name is on the April 12.5s. When you look at it, let's see. The open interest for March is less than 1,000 contracts. The open interest for February is 5,000 contracts. The open interest for April is 100,000 contracts. So this is somebody selling them, and I guess for whatever reason they're just not getting. I've seen them trading, in and out, maybe 30 cents above parity sometimes, or 35. But maybe it will be a harder bar. I just don't know. Too many questions, but all I know is I would be surprised if the volume decreased from this 10,000 today, because I covered a little bit unusual activity last week, and they just keep writing it. So I guess April, you're looking for yield. You want to protect your long. It's a good sale. And it feels like they're kind of calling the top, at least short term. But there you have it.
It's better than rolling to April for 12 cents. I'll give them that. But
there's there's such a good one in here.
We'll get to all those. Don't tease our listeners yet. But you're right. It is fascinating when they develop. I'll use the family-friendly terms. They develop just such a excitement for one particular strike that they just get it. It's like a dog with a bone. They get it in their teeth and they won't give it up, and they keep writing it. They keep writing it. And they keep writing it, regardless of other developments in the underlying. Regardless of, as you said, the continued implosion of volatility to the point where Mr. Juice for Free is thinking about buying some. So things are getting cheap, but it is interesting. They continue. They've drawn their line in the sand of that strike, and they will continue to dig it ever deeper, regardless of what goes on with the tide or anything else. We'll keep an eye on this one. This goes in the to be watched category. There we go, listeners. Live, marked it live on the air. We'll be coming back to some of these and get some updates on these. Meanwhile, though, let's keep on rolling into our next victim here on the old odd block. This is Union Pacific Corporation, ticker symbol UMP, UNP, closing 108.32, up about $0.50 or about 0.5% or so on the day. It's a name that does about nearly 14,000 contracts a day. Today, doing about 35,000. About 5 to 1 or close to it, calls over puts. If you want to find this paper, listeners, you got to scroll all the way out to Jan 2018. No long-term nonsense, or I should say no short-term, no weekly nonsense for us here, listeners. Nope. We're going all the way out to pretty much a year for these Jan 2018 calls. And what caught our eye, not just straight-up calls, but a call spread. It was the Jan 2018 130 150 call spread going up. Paper buy-in to start the day 9,400 times, $2.22. As the day went on, looks like about a couple thousand more piling in after the fact, bringing those volume totals up to 11,329. Again, paper buy-in, listeners, so they're buying the 130s, selling the 150s, doing a total of 11,000, like I said, and change. There is some size open interest on this strike to the tune of 55,000 and change. So again, more paper going up on some already pretty active strikes. Not a coincidence when this paper is going up that far out on a strike that's already pretty active. Not a coincidence. But that said, you may get the inkling this maybe is closing, but there was some paper going up on Friday as well, similar on these strikes, similar vertical here. And it seems like maybe this was closing, but it looks like this is actually perhaps more buying. Kind of like our other friend in our other trade. He just can't get enough of these strikes. He's got to have it. He's got to have more of this 130, 150 call spread, and he's going to do it another 11,000 times. So this is all him on these strikes, and it brings him up to about 66,000 and change open on these strikes. And looking back here at the year that was for Union Pacific, again, kind of another vacillating, slow, winding road to the north. It kicked the year off around the mid to high 70 level, and like I said, these days it hit this peak of about 110, almost one. Actually, hit just ever so briefly 111 back at the end of January, and it's kind of been vacillating around this kind of 108 level ever since. But our friend's saying, yeah, pshaw to 111. We're going higher, baby, and we're going all the way up to the 130 strike and beyond. And so he's putting his money where his mouth is to the tune of 60,000 contracts, if this is all him. And it does seem like it is. So some size upside love here for Union Pacific. Mr. Rock Lobster, what do you think in the age of drones and everything else? But everything's got to be shipped these days, so maybe it is a bullish time for this. What's your take here on our friend? First off, you think this is more open in paper, or are you on the closing train, in which case we have to fight? And then also, B, what do you think about our friend and his long-term call off?
Well, after this exciting day, I would love to pick a fight, but I can't. There's not much of a fight to pick on this one. I was looking at volume on Friday. We wrote this up Friday, or some volume like this. It's weird how just more how these positions just keep growing in size. I thought it was closing on Friday, but again, I kind of left it open because that was an open interest checker for me when. And today the volume went up and they bought more. So what's interesting is on a stock like Union Pacific, what is the look at the upside on that thing. I find it that's it's not like it's a biotech stock. It is it's what, a 200-year-old business.
Yeah, that sounds kind of weird about it. This guy's really just, I think to use the hashtag crazy bullish is not an overestimate here. And yet you're right. This is not like some $5 fly-by-night FDA approval about to come name. This is about as old school as it gets.
I mean, J.P. Morgan brought them public.
There you go. There you go. So the original Mr. J.P. Morgan.
Exactly, the original J.P. Morgan. Or Union, I think, or was maybe it was the Central Pacific. Anyway, it was darn one of those railroads. He tried to make all those railroads work. Anyway, but that we're talking about, that's how old the company is. Obviously, still thriving business, but I keep thinking that there was the possibility, but they keep printing these things at higher prices. I think Friday printed $190, this printed $230. So, I mean, if you were in a crowd and some guy was trying to buy 70,000 call spreads, you wouldn't be selling them to him for lower prices as the stock goes up. You'd be selling them at higher prices. So, I just got to go with, how the old school ways used to work. And it looks like the same type of thing. Again, the in the money option, printing through the offer, all the telltale signs of somebody just wanting more. And I can't imagine guys aren't, who doesn't want to sell that call spread, the 30, 50 call spread? Yeah,
you got some time to trade out of that one, and some juice as well, it looks like. This is interesting.
So what the heck? I think they're just buying more of that, that's all.
All right, kind of hard. I thought we were in for a little point counterpoint there, but you're being nice and conciliatory. It's all this lobster just hanging out around your house. It puts you in a good mood, I guess, and all the snow as well. All right, last up here on the old odd block today, we got Amgen. Talked about them before. It's been a little bit, but they're not newcomers like some of our others here today. Amgen, ticker symbol AMGN, of course, closing today 167.66, up about nearly $1, or about almost 0.5% on today's activity. This is the name that does about 15,000 contracts today, a day, I should say, doing about 23, nearly 24,000 today, close to 1-to-1, a little bit of a bonus here on the puts, about 1.5 to 1 on the puts, and that is what drew our interest for our final name here on the odd block today. Not as long term as our last name, but not in the weeklies either. Gonna go almost, not quite splitting the difference, but a few months out at least. This is out to April. It was the April 115 puts that caught our eye, with someone coming out and just blasting away at an aggressive line in the sand. They said, you know what, 115 and no further. This far and no further. They're willing to do it. Started the day 6,500 times for 4 cents. As the day went on, a total of 8,009. Gotta get that 9 in there, Mr. Rock Lobster. For, again, a whopping 4 cents. These things were still bid, though. To end the day, they went out, even though the stocks were rallying, we got 4 cent bid, blasting them away, and they're still bid for more. Apparently, people will take down all your April 115 puts they want. 4 cents. Not, again, this is kind of getting back to our conversation we had earlier. Not exactly the most mind-blowing yield. We were talking about getting 12 cents out to April. Now we're talking about getting 4 cents. Granted, this is a pretty far out of the money strike, and I'm sure this guy's intent is more on drawing that line rather than the 4 cents. The 4 cents is nice. It kind of just covers the cost of doing business. And hey, you should get something if you're going to work these limits anyway. If you're going to work a size buy at 115, you might as well get something. So I shouldn't blast this guy too badly. But if he was just hunting for yield, I would hope he would choose a better strike than the siren song, Mr. Rock Lobster, of 4 cents 8,500 times. This is the name that's been all over the board over the past year. Kicked the year off right around 140 and then traded much higher. Got as high as 176. Then got the wind just taken out of it again. Got all the way down to below where it opened the year. So it peaked back in September and then trending down right in the middle of the Octave time frame there, down to right in the 130s again. So just a wild roller coaster ride. And of course, as I said today, pushing that 170 level again, 167. So our friend here deciding, I'm going to draw that line in the sand yet again, and I'm going to do it below where it's been at least so far over the past year. So well shy of that, 133, I think somewhere around there is the low. He says, I'm going to go beyond that. I'm going to go down to 115. And he's willing to take a whopping 4 cents to do it. Mr. Rock Lobster, take us home. What's your take on our friend here? And April is now the new month of, shall we say, dead premium. There's just no yield out in April. You got to go farther now, Mr. Rock Lobster, it seems like. They've squeezed all the juice out.
Can you imagine selling 6,000 of those for 4 cents?
What's the risk manager do? You getting the tap on the shoulder for that one? They're like, excuse me, 5 cents is our cutoff. Below that, we have to tap you on the shoulder.
And they're going to go out worthless. I'm going to say that's a 99 delta, right? But it also, like, use of capital. The only thing I can think on a trade like that is, they own a bunch of puts. What do they have? They really want to buy the stock down there. But what's your return on margin for 4 cents after commissions? It's just I know what a trade on the Philly, so that's going to be that block print commission thing, but it is I'm scratching my head all day because it still looks like a massive use of margin to me. Even hedge funds have to maintain margin. So I just looking all around, what kind of a spread? Do they spread it? Do they, and all, you know what it is? It's head scratchingville. I just don't, that is just a line in the sand. It kind of reminds me of Tucson 75 puts. It's not very different. I'll take the stock if it drops 40%. I'll take it.
He's getting at least 4 cents for this. Tucson's getting a penny now. So, that's I guess you got to take the 4x increase in premium, correct? Size money, baby.
It is the road to Dollarville. There you go,
listeners. If you ever wondered, listening to all the many, many 500-plus episodes of this show, what is the path to riches and fortune? You just heard it there. 4 cents, 8,000 times, and you, too, can afford all the lobster you could possibly eat. All right, let's keep on rolling. It's Monday. It means it's time for your questions. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the name implies, the portion of the show where you guys take the reins. Sometimes I get a little nervous on this, but you guys usually do a pretty good job. Since we're talking lobster before, Mr. Rock Lobster, did you have a chance to see? I know you've been buried in snow in the Duchy of Maine. I'm sure they even have theaters out there. But you happen to see the Lego movie this weekend? Because there's a running gag about lobster thermidor. I think that would be right up your alley, sir.
Oh, lobster thermidor. We saw the first Lego movie, and it was bizarre.
It is bizarre.
That was actually...
So take that to the next level, but add Batman, much more Batman into it. And there you go. You get the Lego Batman movie.
Was it bizarre like the other one, like Funky World and all that kind of stuff?
This one makes a little bit more sense because it's Batman. It's got a little bit more of a linear narrative and So, I mean, the characters are crazy, but of course. But this one's fun. But you'll enjoy the running lobster thermidor gag, which I think you'll find it'll be like a night in the Rock Lobster house where everyone's just dining on lobster hither and yon. All right, so moving on to your questions. Let's pay off last week's question of the week first. We asked you guys what actually, before we even get to that, I'm gonna have to dig up that one because that's scrolling down. So I'm gonna get this week's question off to the running, and then we'll follow up on last week. We asked you kind of on the heels of last week. We asked you guys right before the show started. We said, hey, trading calls and puts, that's fine. We like it. We go for it. But smart options traders use spreads. So what is your go-to spread? Again, it's our question of the week, so it just went live. So you got all week to fire off, but if you haven't done so already, get in there. Make your voice heard. It's kind of interesting. Mr. Rock Lobster, we gave them the following 4 categories as usual. Starting off with the vertical/ratio vertical. You got to kind of combo sometimes, couple together in there because, again, you only got 4 choices, and you can't get too nuanced with that. Then we said calendar/diagonal, so any of those. Then we said butterfly or an iron fly, threw them both in together. And then last but not least, iron condor. And you can write in with what we left out. I know there's a bunch, straddle, and all these other crazy things, risk reversal, you swaps, you name it, box, if that's your go-to thing, a box. I doubt that it is, but you never know. So you can write in with your alternative suggestions if you want to do that too. You guys love to hit us up with those. But that said, Mr. Rock Lobster, what do you think? Well, what is your choice if you have a choice amongst those first? And then what do you think is winning our poll, sir?
I just think the simple credit spread is winning the poll. Did I miss that as a question?
Well, we said vertical and ratio vertical, so that could go into there.
Okay, good. All right. So I just, because that's the thing I get the most about risk control on credit spreads. And to be honest, I think they work okay. I think credit spreads, again, it's not my favorite term. They work okay selling puts, I think. Selling calls, not my favorite thing. It always feels like you're chasing your tail because you're selling really low vol and it goes up. So it's not my favorite trade. For me, I kind of like strangle straddles. I'm sort of old schooly like that, and butterflies. So that's what I like, but that probably didn't make the grade. I guess it could be a ratio, some sort of ratio vertical, but that's not really a fly. So I'm a little confused about, your guys' choices here.
Well, we didn't want to get in like long premium and short premium. We've been on that road before.
Okay, all
we
right.
just wanted to go straight up, not credit or debit. Just, these are spreads, so basic verticals. Go for that.
Okay, so I'll do vertical is what everybody liked. But of this group, I probably would prefer the calendar or fly. So I'll go butterfly just because it's that's the one I like doing the most when you actually have some premium to sell.
There you go. I can concur that. I like me a good iron fly. I would go that way as well. And so far, I kind of think the vertical would be winning, and it is. So far, the vertical/ratio vertical taking 40%. Number 2, 30%, the butterfly, iron fly. Number 3, iron condor, lagging behind. And number 4, calendar/diagonal. Again, it's early days. That poll just went live. I'm sure those numbers will ebb and flow as the week goes on. We did mention earlier last week's question. I don't have the exact numbers here, but it was monthly and longer than a month that won. We asked you what duration do you guys prefer. So that's kind of surprising. The numbers came down from the earlier in the week where it was 80% or so in those two, but still interesting stuff nonetheless. Let's go here. We got one here. I think we got time for one more here, Mr. Rock Lobster. You and I talking a lot today on the show here, but this one just came in from Game Day Dog. I like that handle, so he gets to come on the show. He says, hi. Well, hello. I've done well buying calls and puts, but I have been practicing with credit and debit vertical spreads. And he says, see the DPZ trade picture. He sent us a picture, Mr. Rock Lobster. You can see it in the notes there of his trade here in Domino's Pizza. DPZ, not a name we talk about a lot here on the show. And he puts up an example of the March 190, selling the March 190, 195 vertical, doing it for like $1.65 or so here. And he has a question about this. He says, I see the trade in the picture. I'm worried about my max risk. How is this different than selling a naked option if my 195 protection is out of the money at expiration? Can you discuss the surprises or things to watch out for when with vertical spreads? Thanks and great show. Well, thank you to you, Mr. Game Day Dog. I like the handle. And Domino's. Yeah, I want to talk about this one a lot. It's Closing today, 183.80, down about $2.50. So not a good day here for good old Domino's Pizza. This call spread looking pretty good here. He's 190, not coming into play anytime soon. But he asks an interesting question. He's obviously selling strikes that are about $6 out of the money here on the 190 side. The 195 side, about $11 and change out of the money. So interesting thing, a $5 spread. So a couple things to work out. First off, it is different. I can see your thought process of why it kind of isn't and why you might not think it is, but a couple of important reasons kind of why it is. First off, from your broker, that's a limited risk trade now as opposed to just blasting out the 190 calls. If you're just going to go out and blast out 190 calls naked, guess what? They're going to tie up all the margin because you have theoretically and practically unlimited risk because stocks can go up forever, right? Same thing as being short to stock. So when you see it that way, they're going to tie up a lot of margin. When they come in and see this now, instead of being unlimited risk, it's just a $5 vertical. Guess what? This thing could be worth at most $5. You sold it for about $1.65 or so. So you got about a few bucks in risk there, and that's really about it. So they're not going to tie up endless amounts of funds in that coming against you, which is a nice thing. So from a option you see in your account there, your option buying power, whatever they call it, option trading power, varies by broker. You shouldn't see that take a huge hit, whereas you might if you see that if you just wrote the 190s naked by themselves. And that's probably one of the best things, a little bit more creative trading power, a little bit more capital to actually go out there and trade other trades, which we all want at the end of the day. And also, I think for your own personal peace of mind, it's kind of nice to have that. At the end of the day, you've got about $3 and about 40 cents or so worth of risk in this spread, and that's it. And you're not going to have infinite things against you. I know if your stock's still here, obviously those 195 calls at expiration in March are not going to be the most useful thing, but still, they are useful in some of these scenarios. Surprises. Obviously, this gets dicey, Mr. Rock Lobster. If it does get dicey, it gets dicey when you're getting up around that 190 strike right around expiration. And now you got, am I short? Am I not short? What's going on? And maybe you got some events coming out after the bell, too. Maybe you got earnings around expiration just to add a little extra salt into the wound, Mr. Rock Lobster. I'm sure you talk about this with your mentees and clients over there in the land of the pit all the time. Walk our friend here, Game Day Dog, like that handle, through some things he should watch out for when he's short these kind of verticals, because he's nervous. He thinks he's just short a naked option, sir. Well,
let's just say this. The difference between being short a naked option and short a spread is massive and vast. At 11 volatility, not really. If volatility jumps to 24 in VIX, it's huge. So what I would say with that spread is, even though you're still going to be short, you still have the 185 short. I think, what do you do? The 85-90 call spread. Let me see here. It was the 195. You're still short the 90s. Again, it is offering you some protection. Also, the value of the spread has a delta, so it's not going to move 100 delta, meaning the stock goes up $1, you're not going to lose $1 on your spread right away. You'll lose just some fraction of that. As you get closer to expiration, the 190, the call closest to the money gets more dominant. So the 190 call will get more dominant. But from a risk control point of view, just massively different positions. What I would say about this is, it's also that strike in March, I would say, is well within one standard deviation of the underlying. So if you're selling that spread, to me, you just want to be short Domino's because I think, just looking at the pricing, it's probable that Domino's will touch that 190 strike. Doesn't mean it's going to, or you could be right on the charts and the stock goes down, whatever, but I think there's a high probability it touches the strike. So you want to take that in consideration. I only like to sell spreads if I think they're going out worthless. I don't like selling spreads that have a chance to go in the money, because then you've got problems to deal with. So that's what makes, for me, credit spreads in general, that concept of credit spreads, a tougher trade, because I only like selling stuff that I can buy back cheaper. So if it's so close to the money, it could be tougher. I could go a little wrong on direction, and then I got a trade that I got to manage, or adjust the delta or something like that. So the surprise is, as long as there isn't a dividend where the 190 call can be assigned early, that could be a surprise. So you want to check the dividend, because it's possible that Domino's pays a a dividend that's exercisable. I can look right now. I don't think so, but I could be totally wrong because it's not a name I really trade. It's not a very active option trader. It does have a dividend. It's March 13th for 38 cents. So, if let's say you're trading 192, somebody might exercise that call for a divvy because it looks like it's within the cycle by 4 days. So that's a potential surprise. As long as you don't sell your long call out, it will provide protection, which is the whole idea. And the spread will only have a delta. So right now that March 90.95 spread, which is like a 15 delta spread right now, I'm looking, it is 17 and 27. It's a 10 delta spread. So it will only move every dime by every dollar that Domino's moves. So those are, a spread is a risk control thing. It helps you sell something in a risk control fashion. And $2 on a $3 spread isn't terrible. But again, it's the one where I'm looking at 185 strike is $13. So if I add that to where we are, I mean that you could easily touch. And you're also selling it through the earnings. So, if they like the Domino's earnings, it's trading 194. You got kind of an ouchie. So again, the surprises are what's on the calendar while you own the trade. So lots of stuff to take into consideration when you're trying to sell something that close to the money. If you think about it, you're getting $2 for the 90.95, but you can sell the 200 210. It looks like for better than $1. Looks like you can get $1.25 for that. So, I just move as far out of the money as I can for any kind of a credit trade, and I'll take less premium, but I want something easier to manage. So that would be my opinion there on that credit spread from Domino's.
There you go. Juice for free, or sometimes get juice a little bit less painful. But you're right. There are a lot of things lurking on the count. People always get attracted to these trades, like, oh, this is a decent amount of premium. This isn't, like you said, not a bad $1.65 for a $5 spread, a month or so out. It's not terrible. It's not bad, but certainly not 12 cents to April, so that's good. But yeah, people, when you start digging into the calendar a little bit, you say, wait a minute. Of course, the divvy. That's another one that comes up on the radar. Whenever you're selling calls, divvy is obviously very important. This one actually is in this cycle, so lo and behold, that's going to be a thing to pay attention to, as well as, of course, the earnings, which I looked up just now. They're on the 28th. So, yes, that's also in the cycle as well. So if you're wondering why you're getting an extra amount of juice, that's why. You got two kind of events there on top of everything else you worry about. Traditionally, in a covered call or an expiration, if you're short around the strike and it's vacillating and what's going to happen, any news is going to come out after the fact, going to pop you through the strike, and someone going to assign maybe that you weren't suspecting, or vice versa. Do you have to actually exercise your 195s because something's crazy is happening in the after hours? Those are admittedly rare scenarios, but those things could happen. So moral of the story, you're going to be babysitting this guy a little bit, so hopefully you like it, Mr. Game Day Dog. If not, it's come your way already. The stock has sold off. Maybe take it off and maybe wait for a rebound, and then maybe take Mr. Rocklopster's advice and roll up to a strike that needs a little bit less babysitting, which may also help you as well. Again, it depends on your risk preference and your tolerance and all that other fun stuff. All right, we've been going on for a bit. Let's get on to our final segment here, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, Mr. Rock Lobster, we're at that time where we're kind of still in earnings, but not a heck of a lot on the horizon in terms of big names coming out. We got some numbers, not a heck of a lot. There are some Feds always talking. The Fed's yammering. The Fed's yammering again this week, so that's something to pay attention to. What else is catching your eye this week, sir?
The 1107 VIX. I thought we were going to get a weekend markup. We did, and the vol tried to go up a little bit, and it died again. So, things are still a little flummoxy. As far as earnings go, don't we have some retailers coming out? Don't we have Walmart is kind of on its way? As I recall,
I'm looking here on my list. I see Potbelly, T-Mobile, PepsiCo, Cisco, Groupon, your old favorite. Groupon's on Wednesday, Time on Thursday, Potbelly. I'll have to look up Walmart. Maybe they are. Keep going. I'll look them up for you.
And I'm looking at Valence coming out in late February, the stock everybody loves to hate. Best Buy coming out. See if they can keep that. That stock's almost a double in a year. Hard to believe for an online retailer, but Walmart. That's my closet. That's my closet pick. Everything that was ugly will be beautiful again. Notice stocks like a CLF and all these copper and mineral producers are starting to come back to life in a big way. So I'm not leaving that thesis yet. I'm not leaving my big cap technology thesis either. But hey, it's easy to be bullish in a bull market. What can you say? So that doesn't take a genius.
All right, everybody. Look up your earnings for you, by the way, Mr. Rock Lobster. They are on the 21st, so about a week from now. So next week we shall be talking about all things Walmart. But you can still watch them this week if you like. No law against that, sir. All right, and what's cooking in the land of the pit, sir?
We're going to we'll be telling you guys the next Saturday class. Our last one was great. The Vol Master class has gone really well. People like it. That is still ongoing. So we got more stuff coming out. We'll let you know. Website upgrades happening. So you'll see lots of cool stuff from us, especially for our current clients.
There you go. If you're a current client, lots of fun stuff to look forward to. If not, then get on over there. OptionPit.com. See all the fun that you've been missing. You too can become a Vol Master with their master class. So check it out over there. And on behalf of the Rock Lobster and Uncle Mike, who's hopefully off sunning himself and enjoying himself in his serious on assignment business this week, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, sending in such great questions. Keep them coming, and for joining us live. We love you guys too. And we'll see you on Thursday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.